Hey everyone, Meet Kevin here. Wow, I am super excited to be hosting another episode of the Meet Kevin Show. We are going to be talking to somebody who has been professionally working in the stock market since 1982, started at the age of 21, but actually worked in stocks and even running for options exchanges before that in high school and out of high school. Been a hedge fund manager for 25 years, but is no longer a hedge fund manager and has nothing to gain from this GameStop crisis that happened, but is frustrated over what did happen and has a lot of insights into exactly what went down. And I'm super excited to invite Mark on. Mark, introduce yourself, shout out your Twitter, and then we'll get right into some questions.
Well, first of all, thanks for having me. My Twitter is at Alderlane Eggs, and that's my only social media gig. And I'm very active on Twitter. I have no other. I'm not on Facebook or any of this other stuff. It's too confusing for me. Plus, they spy on you on Facebook. But I'm an individual investor. Most people know me as someone who shorts stocks, but I've made most of my money in my life on longs. But I go after really bad people who do bad things to either companies specifically or individuals. You know, I've been all over the subprime stuff many years ago, drugs.
Wow.
Some people I go after end up in prison. But this GameStop, Robinhood, Reddit thing has been bothering me since day one. And it's sort of gotten a little overheated lately. So I figured I'd grab a bet and try to make a difference and see what I could do to help some people out, because it's an absolute mess out there. It's an absolute mess.
But tell me, is the stock market rigged, or was this circumstance rigged?
You know, that's a good question when you think of it. Is, you know, the market I wouldn't say is completely rigged. This circumstance was beyond rigged. I think most people, institutions and big guys doesn't mind when Joe Sixpack loses. They assume they know less than institutions or so-called sophisticated investors. But, you know, I've sort of found the opposite to be true. And I think what happened in the Robinhood GameStop meme stock fiasco is the wrong guys were making an awful lot of money, and the leverage players were on the absolute wrong side of this trade. And, you know, I tried to get people to focus on the switch flipping incident, because that's, to me, where the crime is and was, and less on all the other, you know, conspiracy theorists. And even with this SEC report that came out, I was warning people that it's going to be a big nothing burger, that it will be nothing, that no one will get anything out of it except pissed off. And that's probably exactly what it's been, because they focused on things that don't really even matter and no one even cares about. And, you know, there's little bullet points, and it's, oh, by the way, we're sorry 1 million people with the average age of 19 lost money. But by and large, the markets worked, and the markets didn't work. The markets didn't work at all. And
so tell me about that. Why do we think that the markets didn't work? Is it because of so many transactions going through dark pools during the time of this GameStop fiasco? I believe the SEC report referenced that 88% of transactions went through dark pools or off exchange orders. 55% of those being transacted by Citadel at the height of the crisis there at the end of January. Is this a potential issue? Should we care about dark pools? Is this a distraction, or are we looking in the right place to say, there could be something going on here?
Well, you know, that's really a good question, and that's the excellent point. Everything, to me, including dark pools, it's all a sideshow. It's all a sideshow for what really went on, like in the old days, if you will, or back in the day, as I would say. You know, there's buyers and sellers, and you match orders, whether it's electronic, whether it's done through a human, whether it's in a light pool, dark pool, gray pool, naked pool. It doesn't really matter. You're just matching buyers and sellers. And if things get too heated at any point in time, they should just halt the stock. Just cool things off for 10 minutes or 20 minutes or an hour or a half a day till everyone gets their senses back, line up buyers and sellers, and go at it again. But Citadel always seems to be in the middle of this, what I will call nonsense. And they are over leveraged. They are extremely leveraged. They're too big to fail. They have their hands everywhere. They're in market making, trading, specialists, they're in hedge funds. And when you have your hands on all sides of every trade and you make no matter what, forget payment for order flow. That's just part of the circus. I mean, that's just part of the sideshow. What happened if there was too much pressure in the tank? Just slow it all down and relieve pressure. The stocks were going up, and they were going up a lot. And the wrong people were short the stocks, and the right people, the wrong people, I mean, the man was short the stocks, and Joe Sixpack was long. And the losses were extreme, and the gains were extreme. But to me, the markets, if they're free and if the markets work, if you're right, you win, and everyone should be happy for people who win. If you're wrong and you lose, and everyone's sad if you lose. But you know, people who play, these are not 12-year-olds. Everyone's an adult. You know, you sign forms, you give them your social security number. It's not, you know, I always say something. Hold on one second. I'll read it to you.
Absolutely. Yeah, that's fascinating. It's a market for adults. That's a good point. We want to get
so I have something here. It was the quote of the week in the Saturday New York Times, April 15th, 2000, which was, I guess it's 21 years ago. And it says, quotation of the day: the lesson is going to be, the market is not a game. The market is not a casino. It's a serious thing for serious people. And if you're wrong, be prepared to lose. And that was my quote, general partner of Rocker Partners, a hedge fund. And it was 21 years ago.
Wow.
So what I said 21 years ago holds today. And so that's fine. So people are in it. But if you make a bet, if you like GameStop, or you like AMC, or you like Overstock, or you like whatever you want to like, you like chartreuse hair. If you make an investment or you make a trade and you're up, you do not deserve to be the victim of a systematic risk or leverage or margin failure by your broker, which happens to be Robinhood, who happens to collect and get its revenue from Citadel, who's the trader. It's just not right. It's just terribly wrong. And that, to me, is the issue. Nothing else matters to me other than what went down that day or that week or the events that led up to the halt on one side, because I've never, ever, ever seen anything like it. And nothing has happened, and there have been no changes to ensure it won't happen again. And if
it sounds like, yeah, if you don't mind for a second, it sounds like for you, the issue isn't so much, hey, let's try to analyze where short interest disclosure went wrong. Let's try to find out how bad the spreads are when we're in dark pools. That's who cares? Okay, it's 5 cents here, whatever. That's a small part of the issue. Okay, naked shorts, they happen, then they get cleared, or they're legal loopholes, whatever. Small part of the issue. Okay, stocks get halted. They're automated triggers for halting. Small part of the issue. Short interest disclosures all over the place. Small part of the issue. It sounds like for you, what you're saying is the big issue, and correct me if I'm wrong, but it sounds like out of all of these things, the biggest issue is actually that Robinhood and other brokerages should have been open for business, so that if retail investors together chose to keep this momentum rally moving, they would have had the opportunity to do so.
100%. And it's worse than that. And the part that's worse is, you know, when you, let's just keep staying on Joe Sixpack. When Joe Sixpack opens up an account at Robinhood, they open up an account at Robinhood because they're captivated by their screwy ads that you get to trade for free, and they buy into the democratization of the stock market. Totally fine. Everyone should participate in the stock market. Everyone's entitled. no worries. But if Robinhood is not financially sound and doesn't have their house in order and doesn't have proper risk controls and doesn't have proper track of their margin, and their counterparties and or people who they do business with aren't watching them properly, it sets up Joe Sixpack to get absolutely screwed. And who gives a rat's ass about dark pools or we execute the commissions better? If you're buying a stock at $10 and you think the stock's going to go to 50, do you give a fuck about paying a nickel more? Who cares?
Right.
I mean, who gives a shit? It doesn't matter. It's all a sideshow to get you not to look at what really went on. Because for the so-called nickel you saved or the 2 cents or the faster execution or whatever the hell they call it, the payment for flow, whatever happened, if you lose 130 points because they flicked the switch and you got hosed, that's debilitating. Okay, that's PTSD causing, if not bankrupting to you. That is the issue. Let's not worry about stuff that doesn't matter or tinfoil hat crap or naked shorts. I mean, naked shorting is patently illegal for individuals and institutions. Illegal. You can't do it. It's totally legal for market makers when things get going, as I've explained, and there's loopholes in it. Is it right? Probably not, but it's the law. So these guys operate, these market makers, under the letter of the law. So if they don't have to borrow the stock, they won't borrow the stock because it saves them money because they don't have to pay borrow fees. And if a bunch of people go after them and say naked shorting, naked shorting, naked shorting, naked shorting, they'll simply go and say, hey, shut up. It's totally legal. Here's where it's legal. And everyone who makes that claim will immediately be discredited.
Right.
So
I believe there's the loophole is a good faith loophole that as long as they're making a good faith effort to try to find the shares, they're allowed to naked short essentially, right? But that's also why we're getting a lot of these things cleared, like the fail to deliver, they clear out within a day or two. But what's interesting to me is, and I think this is where I've got the big questions for you is, if the NSCC came in and increased margin requirements on these clearing houses and then subsequently the brokers, whether it's Apex Clearing, which then trickles down to M1 Finance and Webull, or Robinhood Clearing trickling down to Robinhood, isn't it the NSCC who should be blamed rather than the brokers? Or should the brokers have been able to power through this to make sure that they did whatever they could to make sure that trading was available for their clients?
Well, it's a good question and a good point. And I will just simply back up and say, until someone, and I don't know if it's Congress or the Senate, the SEC completely just punted on this thing, find out the absolute facts of what was Robinhood's financial state going into this thing, in the middle and in the end. And when Vlad got on TV, Vlad, the lemonade salesman, got on TV and said, everything's fine. There is no finance issue. There is no problem. He clearly didn't tell the truth, or he didn't know. I don't know which is worse. And everyone gets after Citadel, and for good reason, about what went on. They just don't care about Joe Sixpack. They could care less. They care about themselves. They care about making money. That's all they care about. And they make their spreads. So before anyone can assess blame, someone who has subpoena power to go over the trades and get emails and find out where everyone was in this process needs to get to the bottom of exactly what happened that caused this switch to get turned off. Because I mean, I trade stocks. Well, I'm a shitty trader. I trade stocks like old people fuck. But I invest in stocks. I know where my margin and cash and capital is 24/7 in every second of every day. There's a little thing in the corner of your screen that says where you are. So if that can be done on a brokerage level for an individual, I would think everyone at Robinhood would know exactly where their finances are at every second. And when things start getting tight, I would think the head of risk would go to somebody and say, hey, boss, we're going to have a problem in about an hour. We either need to raise margin requirements on everybody, or give everyone a warning, or do something, because we're going to blow the fuck up if this keeps going. You don't do it after the day is over. You don't do it and tell people everything's fine, and you come up with some situation at 3 a.m. and completely destroy people the morning the next day. The report indicates that hedge funds were also behind the buy side of this, and that market makers were not hedging option trades, implying they knew this was going to happen. So people can deal with the truth, and people can deal with adversity. What they can't deal with, and what really starts to get people going, is when they think they're being cheated, when there's a cover up, when they're getting lied to, especially when people who have less are being pushed down by people who have more. That is what drives people up the fucking wall.
Absolutely.
And given what went on, and given what month is this? October, that's month 10. This happened in January. Given that this happened 9 months ago, and there are no answers, I have yet to hear a plausible reason or of what happened and why this went down. I, for one, though I have zero position in any of these names, and have never had a position in any of these names, and have never been compensated by anyone on any of these names, or Citadel, or Robinhood, or anybody, I think it is so outrageous that I will take my gravitas, if you will, and lend it to these people to try to help organize them and move the needle so the facts can be brought out. And then when the facts are out, then let's play the blame game. Because I don't know if it's Ennis, who knows exactly what went down and who influenced who to flick the switch. It sure wasn't me, and it had to have been someone with great, great, great power. It's either the New York Fed through Citadel. Something went down to cause something that I've never seen, and anyone who I know has never seen. We've seen halts in stocks. We've seen halts in exchanges. We've seen 5-day, 7-day, 10-day, 1-day halts. But you never halt one side of a trade ever. You've never seen that. And it's such an extreme event. There should be an explanation that makes sense, that can be backed up. Now, anecdotally, on top of this, Melvin, who was probably a day or two from going out of business, Citadel miraculously gives him $2 billion. And Ken Griffin says he's one of the greatest investors of his generation. Plotkin is a smart guy, but he's an over-leveraged, arrogant, greedy fellow. He's not one of the greatest investors of the generation. He's probably one of the worst. And if he was so good, why wouldn't Citadel have given him money on day one? Why wouldn't Ken Griffin have given him some of his billions on day one? He only gave him money when he was going to go out of business. And if his largest customer, which is Robinhood, was financially scrapped, simply, why didn't Citadel give the money to Robinhood? That way, this whole situation would have kept on flowing. And if Melvin had to go out of business and would have been down 99%, and they would have taken the stocks to 1,000, so be it. Then the free markets would have worked. Then these things would have cleared out. The shorts would have all covered. The longs would have sold. And then we'd be back to equilibrium. But it's not what they allowed to happen. It's not how it worked. They jerry-rigged it. They fixed it in a way where Joe Sixpack got destroyed in these things. A lot of people got destroyed. And because the people who got destroyed don't give money to politicians and don't pay a lot of taxes and don't have a lot of influence and are by and large faceless, people, don't care. They don't care. I care because I hear the stories, and the stories are sickening. And I'm a regular guy, and it's just bothersome.
So, question for you: what would you say if, let's say, you were talking to Vlad, and he said, "Hey, you know what? On the 27th, we're still trading GameStop. We increased margin requirements. We send out those disclosures like, hey, like we got to have more margin requirements or whatever." And then the next morning, that morning of the 28th, you get a notice from the NSCC or whatever that your depository requirements are, $3 billion or $2 billion or whatever it is. This large number, and you're looking going, well, crap, we got a $300 million credit line that we didn't have drawn. We have all this money available. We thought we'd never have to use this. The odds of this are, 1 in 5 million or whatever they say it is. What do you do at that point if the stock market's opening in 3 hours? What would you have wanted to see happen at that moment, and what would you say to Vlad if he had that sort of defense?
Well, I think what you should do is get him on with me, and you can get Ken Griffin on with me as well. I think that would be good, and winner take all.
I agree.
First of all, I would say you're in the customer-facing business. Your customers are, by and large, unsophisticated new investors, where you say democratization of the stock market. So if you are financially insecure, as Robinhood was, and you have no risk controls, and you have a problem, that's your problem, Holmes, and you need to fix it. Your problem should not result in your customers getting destroyed. So the first thing you do is go for emergency funding. You go to the New York Fed and say, we have a problem. I'm the CEO of this company, and I've messed up. I miscalculated, or our risk department miscalculated our margin. What should we do? Right? And then the New York Fed will say, just, you're not trading today, right? Halt all operations. We'll either shotgun merge you with E-Trade, right? Well, you'll just be a division of E-Trade going forward, or you'll get an infusion and we'll start trading. What you won't do, or what you shouldn't do, or what you should never do, is destroy your customers so you can live to fight another day, and 3 months later go public and become a billionaire. That's what you don't do. Or you go to your counterparties and say, we need $3 billion for a week till this blows over. And then you raise margin requirements to all your customers to 100%. You basically take people off margin and say, if you have to sell, sell. If you have to cover, cover. If you have to buy, you buy. But you guys have put us over a barrel through all this trading, and our risk controls failed us substantially, so we didn't know this. And we're sorry, but we're not going to kill you, our customer, for our benefit. And last I looked, destroying your customer, who you get through the door through Super Bowl ads and all sorts of shit, and you say we give you zero commissions, and you have stars and bars going across their screen all the time. What you don't do is you don't destroy people because you have failed at your job, and you don't do that, and you don't keep kicking the can down the road to kill people. That's not the business you're in. You do not recruit people and get people on the promise of free commissions where they're actually up a lot on a trade to then turn around and destroy them. I mean, that to me is a crime. That's a high crime to me.
Now, what is the capacity for a broker to go to the Fed? I mean, I don't think brokers are member banks. I mean, can they borrow from the Fed, or do you think they should have just gone, like you said, to Citadel or others? Because I think the argument is very interesting. This, don't destroy your customers. They should have done whatever possible they could have. If they were able to raise whatever it was, the $2 or $3 billion they raised within a matter of 24 hours to 48 hours. Why not have done it within 3 hours, or gotten someone to bridge you that loan for 48 hours or whatever?
If Ken Griffin is handing out a $2 billion check to Melvin, who's failing, I don't see how Ken Griffin couldn't have handed a $2 billion check to Robinhood. And Robinhood, amongst its investors, where you say, when we get through this, we're going to go public in 3 months, and you're all going to become multi-billionaires off this thing. Why not do it that way? And if worse comes to worse, there's precedent for this. When Bear Stearns failed over that weekend in 2008 or 9 or whenever it was, you just woke up that day and Bear Stearns was part of JP Morgan. And you don't think E-Trade would have taken all the Robinhood accounts? Of course they would have.
Gladly. Yeah.
You don't think TD would have taken them? Of course they would have. So come the next day, right at 8 a.m. Eastern time, there's an announcement. Robinhood has ceased operations. Robinhood cannot meet its margin requirements. Robinhood accounts are now part of E-Trade. Every Robinhood account is now an E-Trade account. Don't worry, ladies and gentlemen, everything's fine. But your account is now at E-Trade or TD or Fidelity or whoever. Anyone would have taken these accounts. But Robinhood is a business because they couldn't keep track of their margin properly and couldn't keep track of their risk properly and couldn't tell people the straight story, shouldn't be in business, especially when you recruit people, customers, based on free trades where you get money on where your revenue is payment for flow. That's a whole nother subject matter for another day. And you go and screw people. And the way out and the fix under any circumstance in the richest nation in the world should not be destroying your customer. That just cannot be the answer. That is a complete fail. And not only is it a complete fail, there's been no explanation of why it happened. And you know, when I fuck up and whenever I make a mistake, whether it's with my wife or my kids, even my dog or investments, I say, I fucked it up. I made a mistake here, right? I am sorry, right? I screwed it up. Right, I drove the car too fast. It ended up in a ditch. I got a speeding ticket. I shouldn't have gotten a DWI. Whatever the hell it is. Oh, I've never gotten a DWI, by the way. Whatever it is, you say you screwed up. There is no one admitting here that they screwed up. Everyone, you know, the government says, oh, the markets work perfectly. Oh, the shorts weren't that bad. Oh, the individual investors should pay more attention. You know, we have this grand event where a switch gets flicked, but no one made any mistakes. No one did anything wrong. It was all the cosmic shuffle. And I just hate it because, again, I know a lot of people who lost a lot. And I get DMs and I hear the stories and I know some of these people and it's sickening. And it's sickening because the rich got a whole lot richer. Robinhood went public. The guys who were invested in Robinhood made a fortune. Greasy-haired Vlad, the lemonade salesman, is worth $1 billion or whatever the hell he is. And he really, really, really screwed up. And how you screw up and then go and make a fortune on top of it to screw your customers and you screw people who can least afford to lose money, to me is just really bad. It is criminal in my mind. And no one wants to put their neck out and no one wants to say this is wrong. No one wants to say, you know, let's get behind what the hell really went on, because the next time this happens in a downturn or something like that, then the system's really going to shake. And again, I hate it so much. I'll say, you know, I have nothing to gain. I have plenty of money. I don't have anything to sell anyone. I'm not in the advisory business. I'm not running a trading service. I could care less. I care about people. I care about innocent people getting screwed. I care about a system that's broken. I care about a bunch of billionaires who want to shift the blame elsewhere. And I care. And other people should chime in as well and just say this is a fuck deal. You know, this is what went down.
It's interesting too, the point you make about Citadel not having to worry, for example, about PR, whereas Robinhood does. Very interesting distinction. I want to ask you, if you were going to start a brokerage, would you use payment for order flow? What would you do differently if you were going to offer trading services that you know, maybe Robinhood in your mind or other platforms should wake up to?
Well, the first thing in general is nothing is ever free. Nothing is free. So when people say free trading, someone should say, what's the catch? And now people can understand what the catch is.
So a disclosure, maybe like, by the way, we're making this in payment for order flow off of each transaction, whatever.
Well, I think the disclosure's there, but you can make disclosures so fucking confusing that people are in such a hurry to trade. No one ever reads that stuff.
Sure.
Whenever I sign up for anything on the internet, you go all the way down and you just check the box agree. No one ever reads that stuff. What should go on is someone like you, when you get your hair color normal, or someone like me, should just simply say, look, this is a risky ass gig, right? What you're doing is high risk. You can lose all your money if you're wrong. You can also make a lot of money. So understand that when you sign up, and if you get a margin account, which you probably shouldn't do since you're just starting out, like you don't give a 16-year-old a brand new Ferrari. You give them something that's beat to shit because you don't need them busting up a $250,000 car. And you say, this is the game. But on my end, like Interactive Brokers is legit, Fidelity's legit, E-Trade's legit, TD is legit. They don't have these kind of problems. They don't have these kind of issues. It's only Robinhood. It was specifically
payment for order flow. Sorry, cut out there for a second for me. Go ahead.
It can then stem back to this payment from order flow deal. And there's a lot of things, and it gets sort of complicated. And I have dark theories about what Citadel does with this payment of order flow, and none of the examples are good. I just don't like it. It led to something that was really bad and something historic. And it led to these hearings, which were nothing more than just kangaroo court folly. And it led to this.
The congressional hearings were horrible. They were a joke. I mean, the limited questioning, the best questions seemed to get the least amount of time, and the most nonsense got the most time. It's a disaster. But Congress being a disaster is no surprise.
Well,
so
go ahead.
Should TD Ameritrade and Fidelity, if they're using payment for order flow, should they get rid of that, or is this just a matter of, hey, Robinhood, you guys were the ones that had it the worst, therefore you guys should make it right?
Payment for order flow is illegal in a lot of countries and probably should be illegal here. There's no reason for it. There's just no simple reason for it. And this whole concept of better execution is just for shit. It's just not right. So it should probably just absolutely go away and things be made more simple. But there's a weave behind all this, and this is what really bothers me. A lot of these individual investors are a lot sharper than professionals give them credit for, and they work a lot harder than professionals give them credit for. And they had some asshat on the Cartoon Network, which I call CNBC, the other day. And someone asked him about this stock he owned called Upstart. And this guy could not say what Upstart did. The interviewer asked him what business Upstart was. The guy couldn't even answer the question. He would have been a lot better off saying, I own the stock because the stock's going up and I have no clue what they do. The average, Robinhood player or the person who's behind the meme stocks, you can agree or disagree with their basis for why they're in it. You can say that makes sense, doesn't make sense, you can lose your ass, whatever. That's all fine. But at least they have a reason to be in it. They at least have a reason. You don't have to agree, you don't have to disagree, they can make or lose. This clown who got on CNBC, who's in quotes a professional, he couldn't describe in one sentence what Upstart did. Not one sentence. And this video of this clown got viral and things like that. And it's a perfect example of just because you're a so-called professional, people think that they're smart. But 9 out of 10 of these guys, I wouldn't trust feeding a dog. And the individual who at least does the work and has the sense, I have more faith in them than I do in these institutions. But yet the institutions are given the benefit of the doubt because guys show up wearing fancy clothes and they talk a big game and they have an Ivy League education and they, have diplomas on their wall, but they don't know shit. They're just in something because something's moving. And to me, this all stems back to the people with the money push down on the people who don't have the money when things go bad. And when leverage is involved and people's controls don't work, it gets really bad. It gets really bad. And all I really want is the truth to come out, and it will eventually come out because I'm not a give up guy, and other people I think will join in. When the truth comes out and people realize what happened, guys should be made whole, and people who screwed this up should pay a heavy price, a real heavy price.
What if the SEC doesn't assign blame? What if the SEC says, hey, you know what? The NSCC, they had the right to raise margin requirements. And if the brokers decided they were going to go to position close only, then they have the right to do that. And there you go. That's the game. That doesn't feel right, but it seems like that's potentially what's going to happen. What's your reaction to that?
I think what you're saying is a given. I think from this SEC report, it's clear they're going to back up 15 yards and punt it as far as they can. They're going to say, yeah, this could have been done better, and yeah, that could have been done better. I think that's a given. If you count on the SEC for stuff like that, you're wasting your time. My point or points or view is between the people involved in these stocks, whether it's the Reddit crowd, and I'm not a Reddit guy, or whether various groups or things. Someone says there's between 1 million and 5 million people who are affected in this, who are players in this space. My hope is that there is some form of organization amongst these people. And there's nothing wrong with it, whether it's a union or a group. And there's been some talk of, let's just say the NRA has 5 million members. And the one thing about the NRA, and you can agree with guns, you can disagree with guns, you can agree with any of it, they're all unified in message. And they get a lot done because they're highly organized and they use their funding to lobby and make change and or protect their rights. Sure. And they all move as one, and they're unified. So if this group, whether you're in GME or AMC or you're in the meme stocks or Reddit or whatever, if this group were to organize and have leadership that would say, if everyone kicks in $5 and or we have fundraisers, we can hire lobbyists and take our message to senators and congressmen. And there's 5 million people or 4 million people or whatever the number is, you can rest assured 93% of us are going to vote in the next election. And we think,
yeah,
I'm being deadly serious.
That's a good point.
I'm being serious because elections matter and people can vote. And Ken Griffin only has 1 vote, and everyone in this group can have 4 or 5 million votes. And if the difference between control of the Congress is 8 seats in representatives and the difference in the Senate is even, if this group gets together and says, if you don't pay attention to us, we're going to vote. And you either vote with us, right, because we have a serious issue, or we'll do our best to vote you out. And there are some races that I'm sure are very, very, very close. And that's the only way you can really get people's attention to work for and lobby for you. That's the way it works. That's what Citadel does. Citadel gives all sorts of money to all sorts of guys to defend their interests, to make sure Joe Sixpack is pushed down sufficiently that they don't have a beef. And when companies had too much of a thread against labor got unions. But the hard part's done. There's a huge group out there. They're just unorganized, and everyone has a different issue. So, that to me would be a start.
That's a very good point. Just actually assembling and getting the power of that retail investor together. What would you say though? There's some lawsuits now against class actions, for example, now tied together against Robinhood, suggesting potential collusion even between like Robinhood and Citadel. At that time, and I'm wondering, what is it that if retail investors were to get together, that they should target? Do they target the NSCC, or do they target people like Citadel, or do they target the Robinhoods? Where was that potential issue, and at what point do you think this issue graduated to where maybe even other people got involved? I think earlier you'd mentioned the New York Fed.
Well, I'm speculating on the New York Fed because I've been through a couple crises in my life, investing wise. I've seen Russian debt crisis. I saw 9/11. I saw 2008. I saw Bunker Hunt and the silver fiasco. There have been crises all the way along. And the New York Fed basically calls the shots. And the market was starting to have some upheaval when all this was going on. And I'm speculating that someone made a call to somebody and said, basically, if you don't cut this bullshit out, one or more of us are going to go out of business because we're so leveraged. I mean, when you're leveraged at 18-1, I don't know the exact Citadel leverage number, but to be conservative, it's probably somewhere between 12 and 22-1. If you're leveraged at 20-1 and you lose 5%, you're down 100. You're completely out of business. So when you're highly leveraged and things go haywire, there's great risk in the system. And this deleveraging has never happened. So I think the blame is a fifth inning phenomenon of who to blame, who exactly fell down, where exactly the weak link or break was. The first thing that really needs to happen, and I think it's easy, all trades are recorded. Trades are done permanently. So everyone can figure out the trading, whether it's options or stock. And emails are documented. All these guys are on email retention. So all those are saved. So if someone has the energy to subpoena or investigate all of this stuff to get to the facts of the flip switching, not all the events of the stuff that came into the SEC. The flip switching is ground zero. And if you can get to the facts of what exactly happened and the timeline behind it, when did Robinhood know? When did Robinhood know and cover it up? When did Robinhood know and lie? Oh, and this is speculation on my part, but this is the kind of stuff that I would dig in. If someone came up with a timeline that actually and accurately reflected of exactly what went on, then adults and lawyers can look at the timeline and say, here's where we had the break. Okay, here's where NSCC, New York Fed, SEC, Robinhood Risk, Citadel Compliance, this is where the failure was. Like when you have an airplane crash, right? When you have
those black box investigations, hey, here it is. This is what caused it, right?
You go with the black box, you go with forensics on the ground, you go with whatever it is, and 3 to 4 months later, they say a squirrel got caught in engine 1, which caused a fire, which blew the gas line, which lit up the blank, 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 and the wing fell off.
Right.
You get
and it seems like that seems a lot to be this whole NSCC thing with their margin requirements, leading to this position close only. But what I want to know is, we don't think anything's going to change here. Organizing the retail crowd, not an easy feat. What should individual investors do to protect themselves going forward? Should they participate in these momentum rallies? Should they buy a better subscription for short interest data? What should they do individually and practically to protect themselves?
Okay. I like to say that people do more and spend more time researching where they want to go for dinner than they do on the stocks they own. And I think it's true. I think if you own a stock you should be able to explain to a 10th grader or a ninth grader in a paragraph or less why you own it. And I think you need to understand why you own it. I think you need to have a mental discipline that if why you own it changes, I always say thesis creep is fatal. If you own a stock for a certain reason and that reason changes, you should probably sell. If that reason gets better, you should probably buy more. If the reason stays the same, you should probably sit. But you should definitely know what you own and be responsible for what you own and be responsible for your own money and not rely on others. Don't listen. You can like me, you can hate me. I don't really care. But if I say something, you can trust me, but verify it for yourself that this actually makes sense and you buy in. And everyone's responsible for everything. And you should not have FOMO or YOLO or whatever it is. And that just because something's going up doesn't make it good. And just because something's going down doesn't make it bad. But you have to be responsible for yourself and you have to be responsible for your own money. And when things X the switch thing go, you have to say, I got it right. And I'm proud of myself that I got it right. And take comfort in that. And if you're wrong, you got it wrong. You take the blame and you try to say, this is why this is why I got it wrong. And I'll try to do better next time.
Yeah. What about the market? How do you feel about it? Where do you think we're in the market? Do you think we're coming up on a crash? Did we just lose all the negative catalysts? The supply chain fear is going to go away and get better, or are things just going to get worse here with inflation and otherwise?
Here's the good thing about me. I completely don't give a fuck about the market. I don't I know what's going up. I know if it's going down. I know what the issues are. I am singularly focused on specific names and specific things because
can you shout those out?
Well, I'm going to do all sorts of caveats with these names, but when the world was coming to an end last, whatever it was, March or April, and Bloomberg did a story about me. I said it's the most bullish I've been in probably a dozen years. Because when CNBC, aka the Cartoon Network, is on TV begging for the government to shut the market down, that's the most extreme sentiment indicator there ever has been. And I thought people were so negative, and I've been through these disasters before, that the government's interest, it's a huge government interest to keep the market up and to keep people in the market. And the market is sort of the economy. The supply chain stuff you ask, I pay attention to. I always say something, and I think people should think of this always. Folks, shortages are followed by gluts, and gluts are followed by shortages. And when all this supply chain stuff figures out, everyone's going to be going from worrying about inflation to worrying about deflation. Because once everyone's able to produce all the chips they want and all the lumber that people are needed and all the plastics that are needed, once all the shortages are out of the system and people are cranking on production, they're going to overproduce. So no one can ever get it right. It's either you have to overproduce or underproduce. And that's what's going to happen. So shortages, which are now, are going to be followed by gluts. And when there's gluts, it's going to be followed by shortages again. And it's been going on through the test of time. So with all that stuff, that's why I really could care less. I don't pay attention to it. And the government with the taper and the tight, and they're basically always throwing money at things. So sort of like plan accordingly. So if the market crashes, it crashes. If it goes up, it goes up. Everyone's been fighting the rally forever. Everyone's been fighting the market forever. We have the opening, the closing, the COVID, it's just every soundbite they try to get to people. But if you find situations that you really like, and you hold them, you can do very well over time. And if you think simple and you believe in it and you have basis for believing it, I think you can do really, you can do really well, and Joe Sixpack can do really well, better than these institutions.
What do you think about crypto?
I could care less of crypto. I'm not a crypto player. And I'm not a crypto player very simply because I've had no one be able to explain it to me in a paragraph or less. And the people who are long crypto, I give them a lot of credit. I'm happy for them. I'm happy they've made a lot of money. And to the victor go the spoils. I just didn't see it, and I've never understood it. And I'll only be involved in stuff that I can explain and understand. And I have no problem. I don't know, Bitcoin's Bitcoin. I mean, they should trade Bitcoin in $1,000 increments. Why they even bother with if something's at 62,000? I don't even know why you bother with 62,333. Just say 63,000. So to all those people, I'm thrilled as can be for them. And if that's what floats your boat, God bless you. God bless you.
Any real estate? You into real estate at all?
Real estate's all right.
It's okay. Okay.
So
what would you say? Mostly
in Montana.
Stocks and bonds, or what?
Bonds are boring. I have no interest in bonds. Bonds shouldn't be for anybody. I'm a
So
stock guy.
What are the names? You were going to give some caveats. Guy. Yeah. I know you were going to give some caveats, not financial advice. You could lose money, right? But you want to shout out some of your names?
Well, you can anything I say, you can lose money. I think you should verify yourself. And whatever I talk about, I own an awful lot of, because I don't own many things. I only own 3 or 4 things, but I'm extraordinarily concentrated, which I don't advise you do at home. And you can lose all your money, and you may lose all your money on these, even though I don't think you will. And these are financially sound companies, but I don't want to.
So like something GameStop, AMC, Tesla.
No, not in any of those.
Okay.
But I think I always try to think of, I'll mention 2 names. All right. But I try to think of big problems and companies that can have a solution. And something that I like a lot, and I like this a lot, is a company called Enevox. Its symbol is ENVX. It's about a $21 stock. It's been as low as 12, been as high as 28. It was a SPAC. It was a SPAC last year, and the SPAC's done well. Enevox, the chairman is a guy named TJ Rogers, and now he's 80 years old. And I've known him probably for 25 years, and he is a mean, nasty motherfucker. He's a great guy, but to work for him, I would rather gargle with battery acid. He is a tough man.
Which is what they do. They work on batteries.
Well, no, I'm just going to describe the guy who sits on top. He is a guy who I will invest with or follow anywhere. He's hugely successful, but he is not a candy ass. He is a rough, tough customer. He doesn't put up with any bullshit. Anyone who works for him is quite good. So Enevox is coming up with something new in batteries, mobile batteries. And it's basically, instead of batteries being made of the gunk people are used to, this battery is based with silicon. And it essentially has twice the power with the same size, and it doesn't get hot. And if you can get a battery for mobile applications, whether it's phone, watch, glasses, medical devices, that has twice the capacity at the same size, you really have something.
Yeah.
And I've been there a few times. I've seen these made. I know they work. I've seen them in products. The question is going to be yield. And these are made in the United States in Fremont. They're going to be announcing a second plant. Why do I say they're made in the United States, and why is that important? Because I think mobile batteries, with everything that's going on in China and Taiwan, are going to become sort of a national security thing. And it wouldn't surprise me, since the government gives Tesla all sorts of breaks, that the government doesn't make batteries a national security thing and starts to give battery companies breaks. So I think between glasses, which are goggles, which some people think the market for glasses going forward is bigger than cell phones, and smartphones and watches and other, I think demand here is unlimited.
And who was that person that was it TJ or the Herald, or who was it?
TJ Rogers. I think
Oh, he's the chair. Okay, chairman of the board.
Yeah,
Got it.
he's the chairman. I think Harold's a solid guy. There's a head of operations, a guy named Cam, and I think he's a superstar. And Snap or Snapchat or whatever they call themselves, they announced that they're getting in the goggles business. And I think the battery they're using for their goggles is going to be Enevox's. And I think that can be a huge deal. So I think in this world where mobile is going to be a bigger and bigger thing, batteries, it's not the applications. The applications are out there and the software is out there, but it's the battery which is going to enable the application. If you don't have the power to run a device with the cool applications, you might as well not buy the device. I mean, I can't see, but would I get goggles, that have some cool stuff to it? Probably not, unless I could trade stocks on the goggles without looking at the phone, or do other things on the goggles that are cool. So it's sort of a device that's looking for a killer application. And I think the market is huge. I think the company can be huge. I think it's a 3 billion cap now. And if these guys get it right, they could become the Qualcomm of batteries. So I own it. I own an awful lot of it. I own some higher. I own some lower. They have cash. They have no debt. But the trick is going to be the yield in making these batteries. If they get above an 80 yield, I think the stock can be a home run. I think it can just be an absolute home run. So
what does that mean? 80 yield? I'm not a battery expert.
So these things are made like semiconductors are made because it's made on silicon. So if they're mass produced and it's basically wafers that get cut with stuff put in, they then get tested at the end of the line. And if at least 80% work, we're going to have a home run. If 90% work, we're going to have a grand slam, because not all these are going to come off the line and work. If your yields are in the high 90s, we're going to have back-to-back grand slams. So these aren't your typical batteries where you roll that black stuff up.
I think I found a picture here.
Yeah, that could be something like that. Yeah. Okay. And I'm a huge believer. So my buddy Greg Reyes, we're neighbors in Montana. They had Battery Day in July, and we both went there for Battery Day. And Reyes used to run a $32 billion company, so he's seen a lot of stuff. He said it was the single best presentation he's ever seen. Wow. When they demonstrated the battery, walk through the plant, how they're made, and the applications. Because literally the whole thing with the iPhone and or laptops is battery. And if you can buy the new Dell laptop, and basically the battery, they can say this gives you 2 days of battery life, 2 days, and you take this thing on the road and you don't have to worry about charging this thing. Or your iPhone, instead of 12 hours, is 20, or it's 12 hours and they have 5 times the power applications.
Huge shift. Yeah.
Huge shift. So they said a lot. The joke in the iPhones is that this new 5G, or there's even more 5G. What's it called? You're seeing more tech, the 5G UW or whatever.
Oh gosh, yeah. So they keep coming out with the new bands. Yeah, it's
Right.
ridiculous.
The super fast shit. It's on the phone, but it's basically turned off. It's basically turned off because it would drain so much power. You'd have to constantly be recharging your phone.
Sure.
And the concept they say with the goggles is, a lot of people, drive, looking at their phone. A lot of people walk down the street looking at the phone, and they cross and they get hit by a bus. But if you had something, eyewear or sunglasses, and you're at the beach, you can be doing all sorts of stuff. You could be texting, you could be emailing, you could be trading stocks, you could be doing everything, and no one would know.
Yeah, that's a good point.
And if you get the right application that doesn't kill the battery, and it would totally kill the batteries out there now, Reyes and I send an email to TJ, who we know, and say, when you get yourselves involved in these devices, like it used to say Intel inside, you should say Enevox inside, because
there you go.
Because it's a selling point, because the battery is so good. So I think it's great. It's either going to be, folks, when we do this in 3 years, this is either going to be up 10 to 15 times, or it's going to be a $6 stock because something didn't work. But
That's a good point.
Make no mistake, I'm shooting for the grand slam here. This is not for the faint of heart. It's an aggressive name. It's an aggressive company. I think the guys are really good. I mean, TJ is 80 years old, and he has plenty to do other than fuck around with something like this if he didn't believe it. But I always say, I bet the jockey, not the horse. So I think TJ is really good. So
good point. What's your next one?
Well, my next and last one is going to be Overstock.
Wow. Okay.
That's OSTK. And I've been long it for 4.5 years.
Okay.
And there's two parts to the story. And it's a $80 stock. And I probably own it everywhere from 3 to 50 to all over. And I love this thing. Again, high risk. I don't think you can lose all your money. It has about 650 million of cash and no debt. And there's 40 million shares out. So there's, 12 to 13 plus in cash. But they're in the retail business where they'll do 3 billion in sales, give or take. And the company's been around, let's say, for 20 years. And when it started in 99, 2000, their first year, they did 50 million in revenue. So with all this stuff out there about Amazon killing people, they never killed Overstock. And Overstock has taken their revenue from 50 million to 3 billion in 20 years, which is pretty damn good. So they sell,
nice.
So they sell goods for your house, home furnishings and things like that. And the business is growing, and I like that a lot. But the part of this that I love, and the sex show, if you will, is their blockchain assets, which is called Medici. And Medici is composed of about 15 different companies that are anything from T0, which is blockchain trading, same day, and they trade crypto, to Bit, which will be digital central banking. They have something called Grain Chain, which monitors food.
Well, I just gotta say, you just went from you don't care about crypto to you love Overstock and the furniture and the home furnishings to their crypto technology. Like, you seem to know a lot about this. Tell me more.
Blockchain is very different than crypto.
Okay, all right. We'll separate that. Okay,
blockchain is very different than crypto, and these Medici assets are all on the blockchain. They have a digital brokerage business called T0, which trades crypto. But the Medici assets are all on the blockchain, which include mobile voting with a company called Votes, VOATZ. And I'm hugely bullish I'm so bullish on some of these companies, I can't even get into it because I don't want to be perceived as someone who's lost their mind. But voting technology has not changed in 60 years. And there's no reason
Hmm.
with everything going on in voting that people shouldn't be able to vote on their phone. And they have the technology to do it. It works. It works in Utah. It works in West Virginia. It works overseas. And it's just a matter of this thing becoming a thing. But I think digital voting is going to be the future of instead of going to the ballot boxes and bitching about um, absentee voting and things like that. I think that's going to be something. And they have something called BIT, which is digital central banking, and they just won a contract with Nigeria, which is absolutely huge, and that's in the process of being rolled out. So I think these assets are worth billions and billions. Market cap of the company right now at 80 is 3.2 billion. It has a retail business which does 3 billion in sales, which is, which values this asset very cheap. So I think the stock's
Hmm.
worth anything from, I don't know, 150 to $400, and it's at 80. And I've been in it for 4 years. And when I first liked it, people thought I was out of my mind. That was at 15, and I like it, and I'm consistent, and I think it's great, and I think it's very well run. I'm tight with those guys. It could be controversial, but I think it's, again, I'm not in names for the faint of heart. I mean, I'm
Right.
61 years old and I'm not in safe stuff. And I think I'm in it to get it done. But again, these blockchain assets solve problems. If Robinhood would have been more T0 based, this bullshit never would have happened because it's same day settlement stuff. And maybe
Do they have the
Robinhood.
capability of doing this? I mean, like a Paxos, and why aren't they doing this yet with brokerages?
Well, they are doing it. They're doing it on a small scale. They're
Hmm.
doing it with security tokens, which are STOs. And I can get into that a little bit. Everyone's kind of goo goo gaga for NFTs. And I got
Yeah.
no problem with NFTs. And I think NFTs are great. But if NFTs kick off income, which I think is going to start being the thing of the future, they then become securities. And if Gensler says NFTs are securities, T0 is the only exchange that can trade them because they're FINRA and SEC approved. And I think
Hmm.
that's going to be the future, and people just don't see it. So T0 is a private company, but the assets are all under Medici, and it's run by a venture capital firm in Utah named Pelion. So, I mean, there's plenty of information you can get on these Medici assets. And my bet is Pelion grows these things, professionally manages them, and harvests them. And if I'm right, the stock's going to go through the roof. And if I'm wrong, we're kind of drowning minnows because at $80, retail's really cheap and you have a bunch of cash. So, it's not,
It's
they're
almost like a
generating.
free option on Medici by
That's
essentially investing in this furnishings business that is still growing at, 11% this year, 12% next year, something like that. It's profitable, unlike most companies. I mean, 2021, the thing's selling at like 38 times earnings, like big deal. Stuff is way more expensive. It's an interesting argument. You're kind of getting into Medici almost for free, it feels like.
Well, you're getting Medici for free. There's no doubt about that. But the one thing I'll say on the retail side, on the online,
Yeah.
they're taking huge share from Wayfair. They're taking huge share from IKEA. They're taking share from others. And you'd say, why? Isn't all this stuff the same? Yeah, a lot of it is the same. But Overstock has a drop ship model. And in this environment, when things are tight, as the CEO said the other day on the Cartoon Network, AKA CNBC, he said, we're in an environment of very high demand, but very low supply. And he said publicly, and he's a lawyer by training, he says that our supply chain this year is better than it was a year ago. Because if you're a supplier and things are tight, you don't want your goods sitting, in a ship off port. You don't want that because you don't get paid for it. You only get paid when your stuff ships. So Overstock has a huge advantage right now over Wayfair, who has their own internal system. So Wayfair touches the goods 6 times, And now with there being such delays, when you touch
Yeah.
it 6 times, when you order something for Halloween, it's not cool. It shows up for Thanksgiving. And if you order something for Thanksgiving, it's not okay. It shows up at Christmas, and you don't want your Christmas stuff showing up at Easter. And when
Yeah.
you go and buy or try to buy a sofa at Restoration Hardware or Design Within Reach or Wayfair, they'll say it's 4 to 6 months. But if you go to the Overstock site, there's nothing on that site that can't ship immediately. So if they can't sell it, it won't be on the site. And the suppliers now love them because it goes out fast. And I think when the congestion eases up, I think Overstock's going to grow SKUs next year huge. So whatever people are looking for revenue, I think the number's way low. And
Wow.
people don't pay that much attention to them. They're based in Utah, and they're not hypey guys. And I like it a lot. I really do. And I am on top of this shit. Like, I'm only in 3 or 4 things, but those are my 2 best things right now. With the caveat that these aren't recommendations, I own a lot of both. I'm not paid by anybody. I've bought more of both. I bought more Enevox today. I bought more Overstock today. So that's the deal. I will not sell them tomorrow. I have no plan on selling them anytime soon. But
That's incredible.
Yeah. So
thank you for this. I want to know anything else that you want to add. I'm going to put your Twitter information right here. And anything that we missed. I mean, this was really insightful. I appreciate you taking the time. We got a lot covered. Talked about your thoughts on Robinhood and the NSCC and all the madness with the GameStop squeeze and what the distractions are. Talked about some of your thoughts on the market, and then crypto versus blockchain with Medici and then, of course, Enevox. So thank you for that. Anything you want to add?
Yeah, the one thing that I really feel strongly about is I've talked to some of the people on the Senate Banking Committee. And I've talked to them a lot on this Robinhood GameStop issue. I can't emphasize enough how serious these elected officials are on getting reelected.
Yeah.
And it may sound cynical, but when they look at a group of people who are 4, 3, 2, or 5 million votes, they will pay serious attention to this. Serious attention. I don't want anyone to physically protest. There's no reason to have marches because I don't want anyone getting hurt or anyone infiltrated. But if the group can organize and use the NRA, and again, I'm not endorsing or non-endorsing NRA, that group is tied together and they're organized and they're well-funded and their message gets heard by a lot of politicians who back those guys. And this is a very favorable message of the little guy up against billionaires who push him down. It's a very popular message. It's very politically easy. And the Democrats control the House by 8 seats, I think. And if some guy in southwestern Missouri is worried about getting beaten, and this group targets people to get their message across, it will become very effective because there are others like me who are pissed off, people who have means and people who will want to help. But it has to be organized. It has to be actually based. It can't be on a bunch of unfounded conspiracy theories. And again, in a nonviolent way, instead of shoot, ready, aim with all sorts of stuff, if it becomes ready, aim, fire, these guys will take the crowd very seriously because they'll be forced to, because they'll know they'll get voted out. They know that I'm a Montana resident. There's 1 million people in Montana, give or take. And let's say half vote. In order to be a senator in Montana, you only need about 300,000 votes. That's all it takes. And in order to be a representative in Montana, it's a whole lot less than that. And their votes count as much as the senator from New York or North Dakota or South Dakota.
It's
or
true. Yeah, I mean,
Dakota,
look at
right?
Joe
So,
Manchin, it's one vote counts just as much as the vote from California.
Exactly right. He's
Yeah.
a senator from West Virginia, and you can say whatever you want about that, but he has more clout right now than anybody. And if the GME AMC crowd were to get together, didn't you run for governor or something in California or something like that?
Oh yeah, yeah, I did.
Okay, but if you had a base, if you will. So I'm a huge fan of yours, by the way.
Thank
right?
you.
So I'm a huge fan. But if you lived in Idaho and there were 4 districts and you were running for the House in Idaho, and it only took 87,000 votes to get in, and you had the support of this group, I guarantee you would get in. I guarantee you that the people in that region who were affected would put it over the top. No, I'm just using it for an example. It doesn't take much in many regions where things are really tight to push someone over the top. Now, California and New York and Florida, very different. But they don't have all the sway. Southwest Oklahoma, Northwest Arkansas, Southeastern Indiana. There's a lot of things that are tight. So you don't know unless you try. You don't know unless you get together and say, this pisses me and others off so much. Why don't we do this? Because I know we can get additional voices other than just me, right? Because what went down is wrong. You explain it to anyone from an 8th grader to an adult. What went on is wrong. Even my buddies who are still in the hedge fund business, and they make money in all sorts of ways, they call me and say, what went down is wrong and what you're doing is right to try to help these people out. And you can either talk about it or you can do something about it. So anyone watching this who's part of it, do something about it. Everyone get together, put your differences aside, and try to push it through. I mean, this is the time. I mean, if it's not going to happen now, given what went down, it's probably not going to happen for a while. And sure. People are quick to talk, and people are quick to say various things, but
change is hard in America, not just California.
Well,
everywhere.
Change
is pretty hard, especially with politics.
But if you're nonviolent and you speak truth to power and you don't let up,
gotta try.
You got to give it a go. And if you don't give it your all, I don't mind. I failed many times, but it's not because I didn't try.
So, that's a good point.
I guess.
That is so well said. You got to put the effort in and try. At the very least, you get your messaging out there. So that's also very important because that can motivate change by pressure. But seriously, thank you so much. I recommend everybody follow here this Twitter tag right here. Stand by for 1 second. I'll end the live stream here. For everybody watching, thank you so much for watching. Consider subscribing to the channel.
Thanks for having me. It was a lot of fun. We'll do it again.
Absolutely. Yep. Hang on just for 1 second. Folks, thank you so much for being here. Consider sharing the video and subscribe. And thank you again. We'll see you in the next one. Bye.